This is episode 62 with Karn Saroya.
Welcome to Spot On Insurance. Join us each week as we speak to insurance professionals, attorneys, regulators, and compliance specialists on topics ranging from improving your agency to staying on the right side of the law. Subscribe and stay informed on the effects of new trends and disruptive emerging technologies on your businesses and your industry.
Karn Saroya manages day-to-day activities at Cover Insurance, an app-native property and casualty insurance company that has raised $11 million in venture funding. Prior to Cover, Karn led Stylekick, a large mobile e-commerce marketplace that was acquired by Shopify. Karn was a management consultant with the financial services advisory practice of Oliver Wyman. His work included assisting major financial institutions in the navigation of evolving banking regulatory regimes and the development of bank-wide technical programs. Karn, welcome to Spot On Insurance.
Thank you so much for having me. I appreciate it.
Karn, you have extensive experience in the insurance industry, and I want to just take our listeners to some of what you've gone through in your, I believe, kind of like short insurance career. I want to talk about a little bit before you started Cover, Stylekick, and maybe your days having to go through the bootstrapping phase of entrepreneurship.
How'd you get here?
Yeah. Sure. So, you rightly summarized. Prior to working in tech, I was a management consultant with Oliver Wyman. I love the firm. I love the people, but I had near the end of my time there an entrepreneurial itch. I had learned to code and decided that I wanted to try my hand at something that I would enjoy outside the scope of financial services, professional services generally. And so actually Stylekick started in a very different place from where it ended up. So I went to MIT for grad school, and in and around that time, the Kinect sensor, so I don't know if you're familiar with the Xbox, but the device that allows you to play Dance Dance Revolution and tracks your motion. Effectively, what you could do with that piece of hardware, which was effectively a depth sensor and a webcam, is you get the three of them together, and you could create a body scanner. So myself and one of my co-founders, Anand, who I went to high school with, hacked together effectively a body scanner using these three sensors. And so if you stand in the middle, we get a body form. We would use math to shave away clothes. And our thinking was that, you could use this information, point-to-point measurements on an individual, to help inform sizing decisions for online clothing purchases. And so we started down that path, and we launched a product, and we very quickly realized that there wasn't consumer demand for this. It's a particularly creepy thing to do, just to get a body scan and then use that information to help drive purchase decisions. And so we pivoted from there. And we're like, what are we really trying to get at? We're just trying to get a better sense of the stylistic sensibilities of our customers. What are the types of clothes they want to wear? What are the colors they like? What are the cuts they like? What are the price points that resonate with them? And so in a very quick fashion, we launched a mobile app. So we pivoted from, a hardware software business to a pure consumer facing software business. Well, all we did was we put up pictures of folks who are wearing interesting outfits and asked our users on iOS and Android to interact with parts of the image that they thought were interesting. So you would see people double tapping on blouses that they like to indicate that they like the blouse as part of an outfit, jeans, what have you. And in the back end, what we had done was we had tagged each of these pieces of content with the unique attributes. So we knew the price points, the colors, the structural elements that were associated with each of these outfits. And we used that to inform the sequence of content that we showed our customers. So it became very, very personalized shopping effectively. And then eventually what we did was we layered on designers, we layered on lookbooks from folks who were, stylistically inclined who wanted to sell clothing on Stylekick. And we ended up growing that business to about 1 million users and about 15 million pages a month over the course of about a year and a half.
That's amazing. That's really amazing. So just to clarify it, so it's like, let's say you would double tap on a necklace. It would actually capture the data of the price point that's associated with that necklace. And so then you're kind of amassing this data of what type of spending your consumer is willing to give?
Right. We're trying to predict the styles that people find relevant to a specific individual. And so the content that lived on Stylekick was tagged actually by the designers who created that content. So these are the people who create the clothes, or the folks or the influencers from Instagram and other networks who are wearing the clothes. And so if you're given an image, different parts of the image would pertain to different parts of the outfit. And that part of the image would be related to a price point, a set of colors, structural elements. So for example, if I double tapped on a shirt that had a Mandarin collar, you would expect that over time, we would show you more shirts with Mandarin collars. It got that sophisticated, which is pretty cool.
Okay.
Wow.
Okay.
And all of this started from using Xbox.
Yeah, no, honestly, sometimes it just comes down to starting. It's very rare that you end up where you start, especially in technology.
Yes.
Well, you're playing with new ideas and you're utilizing the folks outside. You're not deciding, you're letting others decide, and then you're capturing that information. Yeah.
So I read in something about you in an article. I mean, there's lots of things that are out there because you've built an incredible company. But I read somewhere that at some point you were gently nudged out of your office space in Toronto back in the day. Tell me a little bit about that, your bootstrapping days.
Yeah, no, we're fortunate enough to have a fairly strong network here in Toronto, given that, we built a business here. We ended up joining Shopify, then we moved to Silicon Valley to start a second one. And, we just outgrew the space, really. And we were fortunate enough to have to not pay very much rent in the original space we were at. And eventually what we did was, we got to a fair number of people for Stylekick, and we quite literally just rented a house in the Junction neighborhood in Toronto. And the entire house was just filled with developers, designers, PR interns, and that's kind of how we operated until we joined Shopify. So we were in fairly scrappy even until then. Cover is far larger now than Stylekick ever was, and we're a sizable team across 2 offices. We're a national insurance brokerage. And so it's not quite as lean, but, I don't particularly miss the bootstrap days, let's say that.
I know a lot of our listeners aren't aware of this. We now have like 60 to 65 employees in Texas and then a small team in Puerto Rico. But when we opened our operation here in Central Texas, we actually, Ted and I, purchased this building that had about 5,000 square feet, and we used part of it for personal space and a very small part of it at first for the business. And every 6 months, as we continued to grow and get more clients, we would have to do a build out. So we were doing build outs every 6 months to the point where we no longer fit in the space.
We were thrown out, basically.
And we were thrown out of our space, because it was like the employees were just taking over the entire space.
Not a bad thing. We were growing.
Yeah.
That was 20 years ago when we started.
Yeah, but you relish going through that. We definitely were able to just kind of expand on our own and just grow organically. And we look back to those times and appreciate everything that we went through. So take us to today to, I think Ted in your intro said, you guys have been very successful with VC funds. Tell us about your new venture and how you were able to bring in some new money into your endeavor.
Yeah, sure. So, I can start off where we left with Stylekick. We ended up joining Shopify. I ran a mobile product team at Shopify, and I love that company. It's a great, Canadian success story. But we decided that we wanted to continue building products for ourselves. And so we moved from Toronto to Silicon Valley to join Y Combinator. And so if you're not familiar with Y Combinator, it's the seed stage program that funded, or was the first check into Airbnb, Dropbox, Reddit, Zenefits, Coinbase, a fair number of fairly sizable tech companies. We were fortunate enough to do really well during Y Combinator. The folks that run Cover with me are the same co-founders that I built Stylekick with. Those ladies and gentlemen I went to high school with. Natalie's actually my fiance. We've been together for 10 years. And then Ben was our first hire in Stylekick. So it's a very, very tightly knit team. We've been building consumer-facing products to scale for about 6 years. Everything we've ever built has been featured by Apple or Google. So we build beautiful products on native mobile. We've driven millions of people through our apps in the past. So we have a pretty, intimate understanding of how to drive distribution on mobile. And then, of course, we pulled these skills in acquiring customers and developing product into the insurance vertical. So the way you can think of Cover now is, we're a tech company with a national insurance brokerage bolted on top. We are licensed in every state with the exception of Virginia. We have appointments with more or less every non-captive carrier in the country. Most of our business is standard and preferred. We tend not to work or operate in the high-risk space. And we're, at our core, a tech company. Everything that surrounds the Cover experience is intended to streamline the process of buying insurance for our customers, which means hitting third-party data sources to get a sense of whether our customers are homeowners, know where they work, how long they've worked there, what discounts are relevant to them as a result of those pieces of information being gathered in advance. All of our customers two-factor auth into our app, so we have verified numbers for everybody, which means that every one of our customers has a direct line to us, a dedicated direct line to us to engage with our agents via SMS or directly via phone call. And then we hit a bunch of third-party APIs, so data sources like Verisk, Newstar, that give us access to things that would otherwise be tedious questions to ask our customers. And so the onboarding for traditional lines of insurance like auto and home can be drastically simplified to simple things like asking for an address or asking a few simple underwriting questions. And then the key and the core of, what allows us to be a sophisticated front-end underwriter is our ability to capture imagery. So video and images of things that people want to insure, make sense of those things, resolve damage, catalog, detect and catalog property against policies, and go from there. So what you'll see on cover is you'll see people who walk around their houses, and we have a TensorFlow-based camera. So there's a computer vision aspect to what we do, where you pop open cover, you walk around your house, we auto-detect, identify, and catalog your property. Our customers will give us 360 views of their cars, and snap pictures of their odometers. And what it helps us do is mitigate fraud in the front end. And what it helps the customer do at the end of the day is expedite the claims process as we share this information with the customer to be sure that it eventually flows through the carrier and that claims process. So the key to our business is people take pictures and videos, things they want to insure. This is a broad variety of things, but still our dominant lines of business are auto and home. But people have sent us pictures of their kittens, their watches, electronics. We've gotten tree houses, we've gotten tanks. People take selfies trying to get life insurance. It's a pretty broad array of things that our customers try to insure.
Well, I can see where that just works out so well, because I find it very tedious having to go throughout the house and start writing down what it is that I have and then finding the receipts for those things to send out. So I can see where you've streamlined that to the point where it's fun to go around the house and do these things and do it with your car, the odometer, whatever. It's not tedious anymore.
Well, I mean, it's one thing. I think any good technology company is going to find a way to streamline the onboarding of, the simple acquisition of insurance. That is going to be table stakes for any tech company. I think where people are going to differentiate themselves is where traditional insurance companies fall flat, and it's really the block and tackle stuff. It's getting ID cards out. It's making sure that pricing is near instantaneous. It means that, our agents don't need to call to collect payment information. They can do it directly in app. It means that if a customer wants to text us rather than call us, they're welcome to do that. And that can be sorted out by our CRM. It's really the experience post-sale that I think is a differentiating factor is going to be the differentiating factor between insurtechs, insurers, technology-enabled brokerages. And that's where we focus a lot of our energy.
Very interesting. I mean, it sounds like you have really thought a lot about the customer experience, and you've put together a sophisticated and robust platform. So totally different what you're doing now than what you did with Stylekick. Tell me about when your team first decided the insurance industry, that's the next industry that we want to tackle. How did that come about?
Sure. So like I said, we had the itch and we were thinking about what business we wanted to build next. And we built a couple of things, and then comes from the healthcare space. We considered a healthcare app. Natalie worked for Russell Simmons in New York in entertainment. And that was really interesting. So we considered, again, fashion and entertainment. I had an anecdotal experience with an insurance brokerage in Toronto that we had tried to get E&O from for Stylekick. And it took me 5 weeks. And I had to make 2 trips to the financial district in Toronto. It was in prime financial district real estate. And the brokerage is wedged between a private equity shop, a consulting firm, and an investment bank. And I was wondering how this could be possible, because as soon as I got there, I didn't see anyone working. and to me, that was it was odd. And so I did a little bit of digging. And it turns out, for brokerages, a lot of the value in the insurance, in insurance accrues to folks who distribute and act as frontline underwriters. Brokerages tend to be profitable enterprises. And so we did the backwards math, and we were like, okay, well, this is a business that we can get consumer scale on. We know we can drive millions of people to our apps. We've done it. And at the same time, the economics support very, very broad acquisition. And so when we were selling $300 pairs of jeans on Stylekick on a small device and generating effectively affiliate income, that really paled in comparison to what we thought we could generate on native mobile direction mobile web. And so the very first version of Cover was very simple. All we did was wanted to prove the point that we could drive customers through our apps. And so we built something simple. We launched Cover with effectively 4 screens. 3 of them explained the premise of the business, which was take a picture of something that you want to insure. And then all of it just led to a simple camera screen. And all we wanted to do was see that people would take pictures of stuff that they want to insure. And the results were insane. I mean, what we saw was, again, these tree houses. We saw people who were washing their cars, literally taking videos of themselves washing their cars to prove that they were responsible stewards of their property. We got tanks. We got people taking selfies to get life insurance. We got iPhones, we got laptops. We got all sorts of things. And so it was a bit of a violation of our expectations. Like we didn't expect that enthusiastic of a response, but it's really when people perform particular behaviors that you did not expect. That's usually when you double down. And so obviously we uncovered a behavior that other people in insurance had not as of yet. We rebuilt the cover app. We went and we got licensed, and you guys are super helpful in that, obviously. And then, and off we went. We went and got our appointments. We effectively set up the national insurance brokerage in under 8 months, which is pretty fast. Yeah, and then that was effectively Genesis. A lot of experimentation, effectively. It was in a variety of different verticals, and it was really just to tease out behaviors that we had not seen before.
Well, the stuff that you're doing is cutting edge, but is part of what's helped you guys out the fact that insurance agents, the reason that this whole industry is kind of under attack is because the profession hasn't changed since, grandpa?
Forever.
Yeah. And I think it's not really like, look, we have encountered all the difficulties that a traditional, brokerage would encounter, right? Very few insurance companies have payments or pricing APIs. It's very difficult to build technology on them to support a streamlined product experience. So I understand why things are the way they are. It just has taken some time for folks in technology to become particularly interested in solving these problems. Simple things like my ID card didn't show up. An insurance agent really, if you're trying to be value added, you shouldn't be chasing down ID card. A preferred carrier who tries to cancel your customers because they weren't able to get them on the phone once you had bound them, that's ridiculous from a customer's experience point of view. And so when I talk about like this block and tackle stuff, that is what an agent faces. At the end of the day, the core value of an agent is in, if somebody's going to spend a couple $1,000 in insurance premiums on, with you, what they're looking for is advice. And that is actually very valuable, even in the insurtech context. We see our conversion is dramatically higher whenever a customer is able to engage with one of our advisors. They're there for that, especially if they're spending a material part of their after-tax income. If it comes to like low-priced impulse purchases, like $5 renter's insurance policies, it's far less. The barrier there is much lower, but if it is significant and it tends towards a more complex risk, humans are still important. Technology should just automate away all the tedium effectively.
That's what I'm hearing from you, that it's really helping, that what you're doing is you're not doing away with the customer service. In fact, you're able to give more customer service, better customer service as a result of the technology behind everything. Your people are able to pay more attention to the details. So the customer is then at the center of everything that you're doing.
Correct.
Spot On is sponsored by Insurance Licensing Services of America. Need help with corporate name changes, annual returns, or surplus lines tax filings? Feeling overwhelmed? If you're looking for experts in regulatory compliance, you've come to the right place. ILSA provides the industry with over 50 services. To learn more about the company and how they can help, visit ilsainc.com.
So it's interesting, you started your business really kind of from a pain point, right? You were trying to buy your E&O insurance and you found process to be pretty cumbersome and not a very good customer experience. And you decided to kind of go ahead and develop this business knowing that you could do it better. It's kind of like when Ted and I decided to start ILSA. I was frustrated at the time because I used to outsource and I was frustrated at the lack of automation at the time.
Technology,
same thing just 20 years ago. And I said, yeah, we could start this business. It's a complicated business, but as long as we can use technology to streamline the process, we'll be able to do well. And that's worked out really well for us. The other thing that I hear you saying, it's kind of like, you're not taking away the role of the advisor. What you're doing is you're embracing technology to kind of start the conversation with that client. You're just using technology to perhaps reach out to more customers, more prospective customers, but that's just the conversation starter. Is that correct?
So for certain lines of business, if it comes to a customer who has multiple cars with us, a home, an excess or an umbrella policy, those types of folks are not yet conditioned just to click buy. I mean, they tend to have exposures that can be a bit more complicated and they do need to be sorted out by an advisor. The key really is you don't want, humans keying in underwriting information to a third-party rater, being flipped out to a carrier site, having to do this tedious work of reconfiguring each of the quotes, running report, at the end of the day, having to chase down payment, at the end of the day, trying to follow up if ID cards haven't been issued. All of that stuff should be automated. And a lot of what we do here is basically building technology to streamline that entire process. If you take a look at the quality of life of the agents that work at Cover, it's great. All they do is they talk to customers who want to buy from them and make sure that they explain their product very, very well. And I think that's kind of the place in the ecosystem that agents have. It's, again, as advisors rather than, data entry personnel, which is a big part of their jobs now.
So then you don't really see yourself as a disruptor, the way people are saying, right?
I think what it is you take the market structure as given. It is a fact that conversion is higher if humans are involved in the process. As a technology company, what we've done is we've made it dead simple to sell insurance. And so that is not necessarily something that needs to live solely on Cover. You could spin up a custom instance of our CRM. You could have customers flowing through that CRM, and you could have a very distributed way of selling insurance. It doesn't need to be local to San Francisco or to wherever else our sales offices will end up being. And what it also allows us to do, the benefit of having run a national brokerage now is it also gives a very, very good sense of where existing carriers are competitive and where they're not, what their risk appetites look for, what their conversion looks like on a geographic and risk basis. And it gives us a sense of where, as a risk market, like a marketplace for risk, we can inject ourselves and perhaps stand up our own products. And we've actually already started to move in that direction. We have half of our customers come in the door under the age of 30. Most preferred markets in the United States, and those that are available to independent agents are preferred carriers. And they're looking for people who are 40, have multiple cars, have a house, have kids, so they have term life. And then they're getting the umbrella policy as well. And they're extremely high value customers because they don't turn very often. We're a tech company and a lot of young people use us. Inevitably, a lot of those customers end up at Geico and State Farm. And the reason is most preferred carriers do not price for them. And that is it. And so there's an opportunity for us to step up to the plate and utilize technology to be able to better facilitate those customers who are the preferred customers of the future. So you take a look at a young person who's going to a top 100 school, is a responsible steward of their property and exhibits financial responsibility. And there are a variety of different ways as a technology company for us to determine that, and is very comfortable using an app to be able to scan their car, to resolve any damage, send us pictures of their odometers, to mitigate mileage fraud, enable location services, to mitigate garaging fraud. All that stuff helps us become an even more sophisticated frontline underwriter and be much, much more competitive for customers who we see graduating into great risks over time. And so running a national insurance brokerage is great, but really what it's done for us is given us incredible visibility into what we think we can build next. And that's coming.
Yeah, but what you're doing also is forcing the industry to, not just you, but insurtechs in general, in my eyes, they're forcing the industry to evolve because they're taking a look and saying, hey, it's time that you put up or you're going to vanish, in a sense.
Right. At the end of the day, there are a fair number of insurtechs that are focused on distribution, and quite a number of them are just focused on, rather than working with carriers who we consider to be partners, rather than working with them, just stood up their own product with little consideration given to, are you a good underwriting organization? And it's starting to manifest as, excessively high loss ratios. We're running across our personal lines or auto book. On the standard side, we're running at a 21% loss ratio, which is insanely low. That is a direct result of all of the risk mitigating pieces of technology that we've built into our apps. And so you're not going to build a profitable insurtech by running at 168 in perpetuity. That will never happen, and you'll be out of business very, very quickly. What we have invested a lot of time and effort in is making sure that, hey, we collect the information that's necessary to identify the best risks, and we need to reward those great risks eventually by either standing up some products that allow us to price more competitively for them, or working with our carrier partners to make sure that those customers are correctly rewarded for being great. That is the way of the future. At the end of the day, in the long run, it will be companies in the insurtech space that underwrite the best that will win. And that's really it. That's how you remain a going concern in this space.
So you're saying no fake promises and really work to reward those that are right?
Right. Yeah. I mean, we're trying to run a real business, right? So
that's right.
There you go.
This is a real business. And the insurance industry is such a highly regulated industry. So you mentioned before that you guys are licensed across the nation with the exception of Virginia. And a lot of insurtechs have gotten the reputation for being kind of rogue and just kind of focusing on technology first and forgetting that they're actually delivering an insurance product and taking care of that need. So tell us about when you first realized that licensing and to be in compliance was going to be such a huge part of this endeavor.
Look, like we're a Y Combinator company. You guys are very familiar with the story of Benefits.
Yes, of course.
And so Benefits is also a Y Combinator company. And I have a lot of respect for leadership. And there's a lot of stuff that happened there. But we took that entire fiasco as instructive.
Yes.
And it's better that we be above board because the costs associated with being above board are minute relative to the consequence. We're, tech companies sometimes tend to eschew regulation. Mm-hmm. But the reality is insurance regulation is intended to do two things fundamentally. And they're actually both in the service of the public good. The first is make sure you don't discriminate against your customers, right? And that's more of a carrier thing than, and actually some of it's pushed on brokers, but make sure you don't discriminate against your customers on the basis of race, and other defining characteristics. And I think, regulators should do a great job of that. And then the second is make sure that the rates that you charge are adequate for the risks on your book so you don't blow up. And the reason that's important is because insurance is a public utility. For the most part, you're required to have auto insurance. You would be very prudent to have homeowners insurance. You'd be very prudent if you have children or other obligations to have life insurance. And those effectively, in my mind anyways, like the two reasons that regulation exists in insurance. And philosophically, I'm well aligned with that. I think that insurance is a public utility. It should be in service of the public good. And anything that furthers those particular causes, I'm well in line with. Where I'm a little bit hesitant when it comes to the technicalities, we still deal with them, but simple things like having a counter when you're writing your California exam that counts down from 52 hours to 0 hours for like a PMT exam. If you have very, very smart people who are able to absorb tons of content very quickly and pass your exams, there really shouldn't be something that going versus that.
Right.
But I think the regulator will catch up. I mean, you're having a fair number of young folks who are technically savvy starting to flow into insurance, and things will eventually change.
Right. But the other thing, that licensing and protecting the consumer, why those regulations are there is, of course, we go through the background questions and anything that's in that agent's background. But if you have anything to do with not having properly served the consumer financially, if you've been involved with any type of scams, any financial scams, you're not going to get licensed. Those are not the people that you would ever want to be collecting premiums for the insured. So there's a lot of things that can have happened in your background that still allows you to have a license. But those things that have to do with any misconduct with money, that nixes people out of the industry. And that's definitely so important for everyone in there. So thank you for sharing that with us. Now, have you faced any, what you would call like any regulatory hurdles coming from perhaps seeing yourself first as a tech company? Have you seen that?
So no, the answer is, in the eyes of the DOIs that we work with, we're licensed. Any other, entity would be traditional licensed. The only obstacle that I came up with is I'm Canadian, actually, and I have a work visa in the United States. And it's not common that you have Canadians who are domiciled in the United States that are running national insurance brokerages. So I think it was a bit of a learning curve for most of the DOIs to have to take a look at these TN work visas. Except I don't think that they're particularly common. It elongated our process a little bit because the knowledge base in and around what visas are actually in place with NAFTA just wasn't there, but it got done.
Yeah, sometimes we take 2 steps forward and 1 step back because we've had extensive experience with licensing Canadians. Many years ago, we had a very large client that was doing pet insurance, and they were out of Canada, and then they had an office also in Illinois. So, yeah, I think sometimes things just get a little bit more paperwork than we need to start getting into the mix of things. So I also want to talk to you. You alluded to the fact that you guys are going to be rolling out new things. But before we go to that, I want to just find out from you, are you like a serial entrepreneur? Like, how long of a break did you take from Stylekick to your next endeavor, Cover? How long of a break was that? And then I definitely want to hear about the new stuff.
I don't think I've taken a vacation since I finished undergrad.
Oh my gosh.
It's been that long. So my fiance is half Trinidadian, and I went to Carnival with her, but that was like the last time I took a vacation. There's really been no break whatsoever.
Yeah, so you're hungry and every day you're hustling, huh?
Yeah, that's basically it.
And are you able to share with us some of the new things that you see in the horizon?
Yeah. So, I mean, we've become increasingly distribution agnostic. So, as I said before, we're a multi-line property entity. We are building products that allow us to acquire outside of our apps. So, for example, if you go to cover.com/Shopify, this was leaked, so I'll share it. We haven't formally announced it. You'll see that we built a Shopify app that allows us to sell and warranties at point of sale across all Shopify merchants. So really what you should see over time is us investing in growth product that allows us to access customers wherever insurable property is sold, wherever insurable property is managed or touched. And that's the benefit of being a tech company. Everything that we build here from our own insurance products or the ability to interface with other insurance products is API enabled, and it allows us to branch out well beyond native mobile. So native mobile, from our perspective, is a huge pipe for acquisition for us. But you should expect to see us become much more distribution agnostic.
Super cool. So are you saying that as Spot On Insurance listeners are getting to hear about this first?
I think so, yeah. I think it's the first time I've actually acknowledged it.
That's awesome.
Yeah, we'll launch it eventually. It's a work in progress, but it's cool stuff.
We look forward to it. One other thing is we talked about, you guys are kind of like a bridge. You're using very traditional insurance carriers, but you're definitely using the latest in technology, cutting edge technology. Talk to me about, again, your feeling of what is going to happen with the traditional broker if they continue to do things the way they're doing it right now.
So I think for more complex risks, and this is especially true on the commercial line side, there's going to be technology that streamlines quite a bit of the TDM, right? The application process, checking for market availability, that kind of stuff. It's going to become much more software enabled. And I think you guys should, the folks that are focused on the commercial line side should certainly embrace it fully, because it's going to make your lives easier. It's going to keep you competitive. It's going to help keep your human capital costs down. And it's definitely what you should do. And there's some great folks in that space. Indio is an example based in San Francisco. You guys should check out. On the personal line space, I think it's a bit more ambiguous, right? Like, we sell effectively commoditized products. So auto insurance tends to be auto insurance. And it boils down to, is the reputation of the carrier appropriate for the risk profile of the customer? Like, are they optimizing for price? Are they optimizing for customer service and claims experience and what have you? But it is still a standard filed product. Homeowners is exactly the same thing. Renters is exactly the same thing. And I think what you should be prepared for is a much higher degree of automation on the personal line side. And as I alluded to before, if you can't get your employees or the agents that are working with you to the point where they're performing exclusively the advisory and sales function, you're going to fall behind really quickly. And that's really what's coming. It's what a lot of us are building. And it's investing aggressively in sales efficiency. It's about investing aggressively in forms of acquisition that give us a persistent edge over time. So I think it just comes down to what the complexity of the underlying product is and whether or not you can use technology to sufficiently educate and advise and inform the customer about the product. And I think that's just a lot easier on the personal line side than it is on the commercial.
Very good. Very good information for what I call the old school brokers, the old guard. So one other thing is, in wrapping this up, we have a lot of young listeners, people that are just entering the insurance industry or that are considering changing their roles. What one piece of advice would you like to share with them?
If you're just entering or if you're new to this business, I think you shouldn't be afraid to embrace technology. It's not necessary to stick with legacy processes. It's an opportunity for you to engage and embrace tech and build organizations that are on the spectrum of tech company to insurance company, starting to lean towards more of a tech company. I think the average age of an agent in the United States is nearing 60 years old, right? It's something like that. And if you're a new agent, there's a world of opportunity that's available to you. You just need to make sure you're well instrumented to be able to take advantage of it.
Absolutely.
Excellent.
Well, thank you so much, Karn, for being with us.
Karn, for our circle of professionals who are listening, is there a way for them to get in touch with you? Maybe you can give them some advice. I know you're a busy man, but how do they follow you? How do they keep up?
Yeah, sure. You can follow Cover at Cover on Twitter. Myself, my own Twitter handle is Karn Saroya, so Karn, last name is Saroya. Or you can just email me at karn@cover.com.
Fantastic. Well, my guest today has been Karn Saroya. Karn, thank you so much for taking your valuable time and spending it with us.
Thank you, Karn.
Yeah, no, thank you guys for having me. Appreciate it.
Be sure and join us next week for episode 63, when we interview Michael Jans, who in another life served as the Executive Vice President of the Professional Insurance Agent in Oregon, Washington, Idaho, Montana, and Alaska for 7 years. We will be discussing agency management, customer relations, and the evolution of the traditional insurance agency. That's next week on episode 63. See you then.
Visit spotoninsurance.com, where you'll discover an ever-growing library of podcasts, videos, articles, and online tools by professionals for professionals to enhance your insurance education. By the way, that's where you'll also find our podcast notes and bonus resources. Please don't forget to click the iTunes link to rate and review, and let others know what you think of Spot On Insurance. Thank you for joining us, and we'll catch you next week.